This will end up on our website so that everybody can view it afterwards and can be able to send it out to your communities. But my name is Emma. I'm a California Climate Action Corps fellow with the Fire Safe Council. So I'm filling in for JoJo this month while she's out of town. We have a really great guest presentation lined up today, so we're super excited that you all were able to join us. So just a couple real quick updates on the Fire Safe Council and some stuff we've been working on. We are still doing our home ignition zone evaluations. So if you haven't done these yet, this is a really great opportunity for us to come out to your house and we'll walk through your property and give you home hardening and defensible space tips that are personalized and kind of prioritize them for you. If you want a dedicated appointment day for your community, JoJo can absolutely set one up for you. Those have been really helpful in the past, and we've been able to knock out like 8 houses in one community at a time. So it's a great option for FireWise communities. And if you're interested, you just have to email her and let her know, and she can set that up for you. Um, Otherwise, we are also pushing out more opportunities for landscape consultations with the Malibu Forestry Unit. So foresters will be able to come out to your property or to your HOA entirely, and they'll be able to walk you through landscape options for, tree care, defensible space, drought, etc. They're super helpful. I've gotten the opportunity to attend a couple of them, and they're super informative. And if you have any questions about that at all, you can find the information on our website. If you're interested in any monthly infographics on home hardening, red flag lists, etc., those are all on our website. And we do still have some dedicated FireWise door hangers that you can distribute to your communities. That will just encourage some more participation with FireWise activities. All of this can definitely be obtained from JoJo. But to get to what I'm sure everybody is here for today, we have our amazing guest speaker, Estela Felix Almeida, here. She serves as an outreach analyst too within the Community Relations and Outreach branch for the California Department of Insurance. In this role, she acts as the liaison for Senate Districts 24, 26, 28, 33, and 35, which includes many cities and communities across LA County and the South Bay. So she's going to give a presentation and we're going to have some dedicated Q&A time at the end. So hopefully if you have any questions already or anything comes up, we'll have time to address it all. If there's any time left at the very end, we can go around and share updates and any other FireWise related questions outside of insurance as well. So I'm going to go ahead and stop sharing and you should be able to share your screen, Estela.
Okie, let me get started on that. Let me see. There you go. Okay, can everyone see the presentation okay? Okay, great.
Yes, perfect.
Gotta make sure we set it up. Alrighty, and I do have my other screen so I can see the participants, make sure that I'm gonna hopefully ask some interactive questions and see if we can get some answers out here. All right. Well, thank you all for logging in. My name is Estela. Thank you, Emma, for that introduction. Again, I'm from the California Department of Insurance. We do have some of my colleagues here logged in. We like to learn from one another, so this will be a great learning opportunity for all of us here. And I will be sharing our contact information. I did see that my number did have a little bit of we're missing a digit, but I will share my information in case anyone has any questions or wants any educational materials. So I do want to have, let me see. And before I get started too, I thank you again for inviting us. And I do want to give a shout out to you all. I know that this group is a group of leaders for the FIREWISE communities. And I do want to say that we appreciate your hard work and your dedication to making sure that we are building a safer neighborhoods in California. So to get started, let me see. Okay, great. So again, we are the California Department of Insurance. Our top priority is consumer protection. We enforce regulations on most lines of insurance. I'm gonna ask if we can participate. I know it's gonna be a little bit awkward online, but if they can raise your hands to see if anyone has homeowners insurance or car insurance. There you go. Thank you so much. Great. Life insurance. Okay, thank you, Kathleen, for participating. I see our team out here. So these are just some of the few lines of insurances that we regulate, and then we maintain insurance solvency, which ultimately means that we make sure that these companies, the insurance companies, are following the state law and they remain financially stable, so they are able to pay your claims. We set standards for agents and brokers licensing, CDI licenses insurance, agents, brokers, and adjusters. We make sure that they meet professional and ethical requirements. We also resolve consumer insurance compliance. CDI does investigate complaints from policyholders about claims, billing, coverage issues, and unfair practices. We perform market conduct review. CDI does audit insurance companies to ensure that they treat consumers again fairly, they comply with the law, and they use rate and correct information and forms. We also we investigate and prosecute insurance fraud through our law enforcement division, which is another branch that we have, almost like a police department. CDI investigates frauds by consumers, medical providers, agents, and insurers. Now, I do want to move on to our educational topics. And again, I know you guys are leaders of different residential areas and very other communities. So I do want to bring up the fact that we have educational topics. As outreach analysts, we can go either meet with your community virtually or in person, and we can talk about home renters and business insurance topics. We have a really good presentation on senior scam prevention, focuses on giving seniors a warning signs and making sure that we have preventative action for making sure that they don't get scammed. We have the sustainable insurance strategy and safer from wildfires presentations like I'll be focusing on today. We have the low cost auto insurance program, emergency preparedness, disaster recovery, market and legislative updates. And we as a team are very flexible. We engage in, if you guys have any community meetings, town halls, informational guides, if you need any educational materials or flyers, we are more than happy to provide that for you as well. We do workshops and staff training as well. Webinars, which we do have a statewide webinar, and I'll be sharing some information about that in the rest of our presentation, and social media tools. If you want us to share some posts, or if you want to highlight a specific insurance topic, or in that sense, we're more than happy to help in your communities. And you can reach out to us, and we're more than happy to walk you through our resources. Now, focusing on the Safer from Wildfires. So the Safer from Wildfires is a framework, is a interagency partnership. It started in 2021. The interagency partnership was with the California Department of Insurance, CAL FIRE, OES. It requires insurance companies to offer premium discounts to homeowners who protect their properties from wildfire risk. You all know this. This is something that we all have in common. This is where we focus our efforts in bringing this education, these resources to other communities. So this program takes a comprehensive approach to safety. It divides the mitigation into three distinct layers, as you can see. Hardening the individual structure, securing the immediate surroundings, and achieving community-wide safety and designations. This is where we all come in and try to help out. So the focus of this partnership focuses focuses on retrofits for older existing homes in order to help them reduce their individual risk and promote and potentially seek maintaining affordable insurance. So we're talking about those discounts. And to give you a little bit more context, I do want to show you a quick video. Let's see if we can do that. Okay. Let me see if we can just, oh, let me go back. If we can play it, I will send it over. That's not a problem. Okay, maybe not. So I will send this over to Emma and Jojo so she can share it with you guys. But this is overall just a quick demonstration on the importance of mitigation. We have on one side a property or a structure that is mitigated, and on the other side, you can the one that has a CAL FIRE label is the one that's mitigated. If you guys have seen this before, you guys know what I'm talking about. And if not, this is a great YouTube video, short to show your community, kind of highlight the importance of why it is important to mitigate and kind of give them a little bit more of an urgency to do so in case of a fire situation. And we're talking about the steps of mitigating the fence. You can see like once the firefighters start igniting the fire, you can see what starts to go up in flames first, and then it kind of gives folks an understanding of like, okay, if I can do all the steps, this is where I can get started, and then that's where we start the conversation overall. Now, I do want to highlight we have the sustainable insurance strategy. Now, through the leadership of our commissioner, Ricardo Lara, the sustainable insurance strategy is the largest regulatory overhaul in over 30 years. This strategy is not about dropping the rates tomorrow, which is a point that I do want to make, but it's about forcing the insurance companies to come back and write policies in our communities. Because of how this law is structured, the work you do as FIREWISE leaders it's becoming the community's greatest financial asset. And that's something that I want to amplify. Mitigation, the more you save, the more you do, the more you save. It's something that we have been saying since the beginning. And it's something that the message that we want to amplify to other communities as well. The key component of the sustainable insurance strategy is the use of the catastrophe models. The catastrophe model is a rate making tool. This model reflects real mitigation and supports stable pricing in the voluntary market. Using the catastrophe model improves the wildfire risk analysis, factoring in mitigation at the property and community level, and ensures market stability. Now, to give you a bit of a breakdown of the catastrophe models, this is a structured framework used to assess the potential impact of events such as we have hurricanes or earthquakes or wildfires and floods. And it typically integrates these components to calculate or simulate a I want to say like a plan. But this is what's new, and this is what we want to share to the community of why we're working on. And the topic of sustainable insurance strategy is modernize, accessible, resilient, and of course protecting consumer, as that is our mission. Now, moving on to our insurance updates. So the results of the sustainable insurance strategy is that we have 5 companies committed to growing in California. And this is something that's new in 2026. As you can see, our date starts since March. And we do have more folks going into this system. So under the sustainable insurance strategy, 5 of the companies have committed to growing in California, and they're committing to writing 85% of their new policies. So as you can see, we have CSAA, USAA, and there's 4 companies under that specific entity. We have California Casualty, Mercury, and Pacific Specialty. And I know there's a few more coming up that are passed in July, August, and coming up. So this is something that's new. This is coming from the efforts of all the planning, all the mitigation, all the laws, the enforcements, and these folks are committed to giving you your discounts or percentage, applying it to your premium, and seeing how we can bring that accessibility. Now, we are future hoping that we can tackle affordability, but as of now, our focus is accessibility, making sure that we have insurance for Californians. Why does mitigation matter? So under the sustainable insurance strategy, the insurers are committed to 85% coverage in distress areas and priority of zone 0, safe from wildfire compliance, as we spoke before. So number two really talks about the insurance companies. So the insurance companies exercise discretion in offering coverages, and they may cancel policies when the property is deemed too high risk. Now, something that we want to focus and emphasize to the community is that they document all the mitigation measures. And this is something that you can bring to your specific community and say like, hey, like the California Department of Insurance talked to us about this specifically. So document all your mitigation efforts and submit them to your insurer as soon as possible. And this is a note that drones inspections are allowed since there's no regulation prohibiting them or their use. Um, and the imagery may not capture all completed mitigation. So we want to urge your communities, residents to do their own documentation and to submit their own images, their own pictures with their angles and everything, and making sure that they are able to submit to their insurance companies. And now, if there is a response that's like, hey, like we're not doing this, or they don't respond to you, that's when we, as a California Department of Insurance, can step in. And this leads me to my next slide. Oh, jump one in. Okay. Tips on finding insurance and going a little bit over on non-renewal notices. Now, if you receive a non-renewal notice, the first thing you do is you contact your insurers. You request any specific actions you can take to mitigate your risk and retain your coverage, which we have seen in the past. We have examples of community members getting a non-renewal notice because they didn't trim the trees, or there's coverage of foliage or something simple or something that could be manageable enough to reduce or fix that, not specific error, but fix that specific mitigation step and to retain their coverage. Now, step number two is that you guys have resources. You can contact the California Department of Insurance, us. You can work with an expert to file a request of assistance, which I will share the information a little bit more forward in the presentation, or you can call or look through our website. We have over 100 admitted carriers in our website, and you can call and obtain quotes. That's something that we talk to folks. Please use our resources, go through the website, take a day, maybe take a meeting to kind of go with your own community and kind of break down the website. That's something that we can also do too. We can go over what what California Department of Insurance resources are and something that we can assist with. But we have a lot of resources. The admitted carrier list is a great resource, and also filing for request of assistance is a great resource. Now, the step number three, and something that we also share, is there is the FAIR plan. It's not, the best or the most ideal resource, but it is the insurance of last resort. And we have surplus lines. So the surplus lines are not covered or are not admitted carriers, so it's not backed by the California Department of Insurance, but it could be an option if need be. Now, moving with the legislative support. So this is something that the outreach analysts have been bringing it to communities, and we are sharing, and I wanted to share this with you guys too. So these are legislative support bills that we have been working on sharing educationally to the community. So our first bill is the Smoke Damage Recovery Act. This is AB 1795, authored by Assembly Member Gibson. This focuses on smoke damage restoration standards. Our next bill is a Disaster Recovery Reform Act. This is SB 876 by Senator Padilla. This is focused on coverage gaps and policy clarity. And our last bill is the Make It Fair Act. This is AB 1680 by Assembly Member Calderon. This is the Fair Plan Reform and Accountability. So we can share more information about this. We have a QR code right on top of the presentation, and this shares more information. I'm more than happy to send it over to Emma or Jojo, more information, our one-pagers about these legislative sponsored bills. This is something that I did want to bring here because this is a group of leaders. Now, I want to share as well our CDI resources. Now, we do have, as I mentioned, flyers and educational materials in case you want information on cancellation notices or specific our home inventory guide, which is great for folks that need an extra assistance on how to get started on creating inventory guides for their homes. We can promote the California Low Cost Auto Insurance. It's a great resource that we support, and the Senior Gateway is correlated to our senior resources. And speaking of resources, we do have our consumer alerts. This is a great resource for anyone that wants to stay in tune with us. Any new regulations, consumer safety education, fraud prevention. You can scan the QR code. Again, I can send you some information. You can be a part of our inner network to be able to get information from us. And we have our statewide education series. We just finalized our June 17 residential insurance. These are free online webinars where our team leads the conversation, and we invite subject matter experts to kind of tune in into the topic. Our next webinar is on health insurance on August 19th, and we also have the business insurance webinar in October 21st. You guys are more than welcome to join us, ask questions, be a part of the conversation. Again, free information, general knowledge about these topics. And lastly, we do care about what you think. My name again, Estela Felix Almeida. I am a outreach analyst from the Community Relations and Outreach Branch here at the California Department of Insurance. This is a general number. This is our hotline number as well. So if you have any questions, if you want to break down your policy, if any of your residents or team members have any questions, you can guide them to this number. And again, this is our number and our number and our website in the bottom. So if you want to find any of those admitted carriers, you can go through our website and look through, again, more than 100 plus. I would suggest starting from the bottom and working your way up. And I see some of our teammates are sending over great resources through the chat. So I will stop sharing my screen, open it up to some Q&A. Let me see. Here we go. All right. Anyone have any specific questions? Anything I can help with? Yes? Mm-hmm.
I was at a meeting in Topanga Town Council last week, and someone brought up the fact that they're enforcing zone zero, at least on that particular resident. Do we know about that yet? I thought that wasn't really going into full force yet.
The enforcement of zone zero?
Yeah. I thought it's because they're still finalizing all the exact the nuances and details.
To my understanding, they're still in the process. So maybe this is a conversation that the person had regarding zone zero. Maybe they have a specific question, but I could definitely figure out or find out if there's any timeline. Or I don't know if any of my colleagues here have an answer for that.
Yes.
But yeah, Ms. Brenda.
So currently right now, statewide, the policy has not been implemented. They are still working out the specifics. However, local jurisdictions are applying and enforcing zone zero in certain areas. A good example is San Diego as well. They were already implementing zone zero in those areas in counties. So it's important to check in the counties that you live in to see what those enforcement and what those cities and counties are doing.
This was in Topanga Canyon, Ms. Karen?
Oh, thank you.
Okay, I don't know who raised your hands first, but I see, let me see, Ms. Beth?
Hi, Estela, good to see you. I had a couple questions. One, I just wanted to ask on the bills that you talked about, the 1795, 876, and 1680, all great bills and everything. Are they going to be retroactive to our fire, or are they only for future fires?
Let me see. I believe
all the future, right? So they don't
future, not retroactive.
Okay, bummer. What about 1301? You didn't mention that. That's the one.
That's currently still being discussed. It has not passed yet.
Okay, I'm hoping that it will be. Okay.
Yeah, you updated.
All right, thanks.
Ms. Kathleen?
Thank you. I guess I am unmuted. Hi, thanks for coming today.
Yeah, of course.
I'm a part of the neighborhood network in Topanga Canyon. I'm a lead. I'm a longtime resident of Topanga. I grew up here as a kid, and I just got a letter in the mail from Fair Plan taking away all my discounts. And I've never had that experience before. I live right on the edge of Garapita Creek, and I have to do Santa Monica SMRC, whatever it is, Santa Monica Resource Mountains Conservancy work that they don't do. Um, in order to get these discounts back, I don't know if I have to chop down the entire creek because I sit on it or what, but I'm pretty angry at getting this after I am a retired disabled teacher that lives on a fixed income, and I've poured probably close to $20,000 in the last couple years into my property. I've had FIREWISE come out and give me ideas. I've taken the course, and I'm wondering how many people are just going to give up because, and we're going to have a worse situation than we do now because people like me that are working their butts off, doing everything that they can, are getting canceled and the insurance is doubling. So I'm glad to see the resources there, but I'd also like to see um, more personalized, I guess, is what I'm trying to say. We all are really suffering in every which way with our, everything's doubling in price. How do we survive? My daughter happens to be a firefighter paramedic. My dad was. I'm not new to this game. I've been through many, many fires. And what I'm seeing is not good. I've done the zero, I've worked around my property. I can't tear down sheds and fences and trees. So I'm really losing hope. Thanks. Sorry to go on and on, but it's
No,
it's
it's okay.
concerning. It's concerning to my neighbors, and then you've got neighbors that don't do anything.
Mm-hmm. No, I appreciate you sharing, and this is what we need to do, right? We need to talk to one another to see how we can support each
Yeah.
other.
By the way, I put the letter in the chat. But it's like, I have to keep lawn chairs 10 feet apart on a it's like insane, the requirements. This is from Fair Plan.
Have you been able to speak to a Fair Plan representative?
I just got the notice, and unfortunately, my broker Max Kramer is very difficult to reach. I've left him messages and I haven't heard back
Okay.
yet.
I think maybe we can, I'll share my information and you can give me a call. We can
Yeah. But I
connect.
don't think this is just me. I mean, I think we're all going to be
Yeah.
getting these, or most of us,
Mm-hmm. Well,
in real
yeah.
life.
Well, just to tackle this scenario, to tackle this situation, and I do think that we can see if we can help you connect with the Fair Plan with another representative and see if we can go from there. But in case there's things like this start popping up more, we can figure out a better pathway, especially if you
Yeah.
haven't received any answers. But
Does
again,
anybody else know? I mean, have you been getting these notices? I would think that people are.
So Kathleen, this is Brenda. This is actually the first I've heard in terms of cancellation for discounts. Um, this is definitely something that we're going to take back and look further into, just in the motives to why the discounts are being removed.
Okay.
In
One of them's
terms,
the FireWise discount.
yeah, so we're definitely going to look into that. I also encourage you to contact the Fair Plan directly, and find out for your specific case, just in terms of what is needed on your end. And then encourage you to also submit that request for assistance on our webpage so that you are able to allow us to look into it and really ask the FAIR plan on your behalf, right, to give us answers to what that is. So we would need a request for assistance in order us to step in.
And not to take up a lot of more time, but I will say I already did reach out to Fair Plan before I got this letter, and I did get the actual report from my home, because what's been happening is they've been coming out to homes. I know they've done this in my neighborhood, and they're taking photos. So they had extensive photos of my home. They walked on my property without permission, went all over my property and took photos. And so I have that report. They did send it to me. And it's an old house, but anyway, thanks. So I can share that, but I'm sure I'm not the only one.
Okay. Yeah. So definitely, and there really our efforts are educating to equip you as a consumer with the proper tools to be able to self-advocate, and also ensuring that you know that we are here to support you should the insurers that you're working with are not following regulation, that we're able to ensure that they are, and be able to really advocate for you and demand them to do what's right, follow regulation. Thank you for sharing.
Thank you.
Thank you. Thank you. We have a couple more questions. Jeff?
Good day. Let me get my hand down. I really have a couple, and they may not all be all in your wheelhouse there. This one probably the least, but if you'll give me a chance. One of the issues I have with a lot of the new regulations and such is that it seems to me that the homeowners have been burdened with the entire fire mitigation responsibility. Yet, as I observe and lived here for a while, et cetera, and see all the fires coming over from Simi Valley all the way to the coast, it's brush that is being ignited. And I wonder if there's any coordination between you guys and whoever controls prescribed burns. I understand the problem with prescribed burns. People get frightened, et cetera. But every time there's a little fire that gets put out in, a few hours, I'm happy, because there's less brush to burn and to come over to my house. So my point is, first of all, and I don't know if there's an answer to this, but we as homeowners are being saddled with the entire responsibility and cost because of this. Do you have a reaction before I go on to another question?
So in terms of the cost for the property owner, and these are, in terms of the Safer from Wildfires framework, is really a proactive measure for homeowners to take to be able to protect your property, right? It's
Understood.
not a mandate. Zone 0 is a mandate, and that's just to secure the surrounding, which has been attested that it works, right? In terms of brush that is in public places and public property, there are metrics that they're used to keep them accountable into ensuring the brush is conducted at a yearly time frame for various. Now, do they get to them all the time? Are they perfected? Absolutely not. And so this is where you as a consumer, right, and as a resident of your area, have the voice to advocate through your legislators and through your local entities to really hold them accountable to those metrics. Hey, the brush is overgrowing in my backyard. It's your responsibility. What are we doing? And so it's really encouraging you to use your voice to really hold those that are responsible accountable.
Okay. All right. So moving on, if I may. I just got my insurance bill today, so it's really in the forefront of my mind. And I'll deal with the insurance company about the fact that they say I don't have twin pane glass, but I do. That's fine. But when I look down the list of mitigations I can do, I'll get a whopping $5 discount for a year if I enclose my eaves. I'll get a $5 discount if I do many, many things. It's absurd how much work we have to go through to do these things, which makes me, do a new calculus and go, why should I spend $1,000 to do something in my eaves when it'll save me $5 a year? So the real question here is the legislation that's coming down, does it have financial teeth where if I don't enclose my eaves, they can penalize me? If I don't remove every shrub around the perimeter of my house, can they fine me? Is there any, am I looking at fines or penalties for not following zone zero?
So right now, what's in the works and what's being presented are different versions of what that's going to look like. There are timeframes. I don't know specifically what's going to end up happening
Sure.
until it does, but it is projected to be some type of fines coming along, and it's going to vary based on jurisdiction. However, when it pertains to what you or do not do, that's your predicament, right? That's your choice. However, it is also the choice of the insurer to insure or not, right?
Understood. Yeah.
So, and I think ultimately the real emphasis and focus of doing the mitigations right now, it's not really the financial aspect as it is so much the protection aspect. It is really protecting your assets. And that's really our emphasis and focus, because we cannot tackle affordability if it doesn't, if insurance doesn't exist, right? And so right now the focus is making it a compatible market, so then therefore we can then tackle affordability.
Okay, all of it is a little frustrating, and one of the other frustrating aspects of this is that I live in the middle of a suburban community where my expectation after all the fires that we've seen is that the chances of my house going up are slim and none. Yet I'm being hit, and I understand this, with $1,000 more this year to insure my house, and it just may not make financial sense to me to do these things. If they cancel me, that's an issue I obviously have with the insurance company. But thank you for your answer. I appreciate it.
And then I would also encourage you to submit a request for assistance just to have our team to look at it to ensure that those numbers are within regulation. So
do you have any control over, when you talk about the numbers, what numbers are you talking about?
Your rates and making sure that they're all within the met regulations.
I suspect they are. It's just that the amount of work I have to do to get a $5 per year discount is like, why would I bother? Unless there's a fine or a penalty coming down at me because I didn't do X, Y, or Z. So, all right. Thank you.
Welcome.
Thank you. See, Ms. Nancy?
Hello. So thank you for being here. I have a sort of 3 questions, sort of comments. First of all, I do want to echo what Jeff said recently. The financial incentive is just not there to encourage people to make these changes. And when your neighbor isn't going to do that change, you're not going to make that change either. And just to give you a little bit of context, I live in Pacific Palisades. Palisades Fire came within 2 blocks of my home. And I was home hardening before the fire because I got non-renewed twice. I'm still trying to harden, but at some point I'm like, none of my neighbors are doing anything. How much more money, how many more thousands and thousands of dollars am I going to spend on my home when my neighbor is a huge threat to my home and they're not doing anything? So that's just something you guys all have to really think about. It's really, really an important issue. I did have some questions about the insurance companies that are now coming on board and mandated. One of the issues we have in our community is there's a shortfall typically between where people's insurance is and the cost to rebuild. The cost to rebuild to code is astronomical now. And I'd like to know, of all the insurance companies you've named, how many of them have caps on coverage? Because I do think those caps on coverage create a problem, even if you can get it for people in my community that have these, massive costs. If my house burns down today, it's going to cost me way more than $3 million to rebuild it and to code. And a lot of these companies have 3 million caps. So you're making progress because you're getting these companies to do something, but you're not getting enough coverage given the current cost to build to code. I mean, what Kathleen's talking about the cost, Jeff's talking about the cost, they're really, really high. And that's something I want to see the California Department of Insurance address. Maybe we need to be able to stack coverage. Maybe you need to have two insurers being able to insure a home that has a replacement cost above a certain threshold. I don't know. But that's something I'd like to see addressed. Lastly, I want to tell you from my own experience, I was very grateful. I got non-renewed twice by admitted carriers. I was able to find insurance coverage effective the day of the fire, by the way, to insure my home through a non-admitted carrier. However, my premium is 4 times what I was paying before. It's astronomical. And I learned that I have to go to the non-admitted market for earthquake insurance as well, and actually for workers' compensation insurance as well. So I noticed that Nevada disconnected fire insurance from other forms of insurance. And I would like to see the California Department of Insurance do the same. There's no reason why I should be paying on a non-admitted carrier for earthquake insurance when I'm sitting on granite. And from an earthquake perspective, I'm low risk, but the fire risk is so high that I'm being forced to pay astronomical coverage for earthquake. Actually, we couldn't afford the earthquake coverage because our fire insurance now is so high. So I had to drop it. So I would like to see the California Department of Insurance separate fire insurance on homes in the WUI from other forms of insurance so I can remain in the admitted market for liability, workers' comp, and earthquake, but then may have to go to the non-admitted market only for fire insurance. Thank you.
Thank you, Nancy. We appreciate and thank you for letting us know. We hear you. You know, this is not a perfect system. We are working towards all of these questions and all of these, suggestions. So we're open to taking them in, and we can elevate and we can try to help as much as we can. But again, like, we are working towards accessibility, affordability, something that after we build upon insurance market competitiveness, right? But one step at a time. But we thank you for letting us know, and thank you for sharing, and we appreciate it.
You're welcome. And I think, why don't we do what Nevada did? Nevada got one bill that decoupled the fire insurance.
Mm-hmm.
That is not a massive task. California could do that. Nevada did it. We could do it. That would help a lot of people who are left with non-admitted carriers for fire insurance to be able to remain in an admitted market for other coverages. That would save people a lot of money. Then maybe we could then put that money toward hardening our homes.
No, we appreciate it. Thank you. We'll definitely elevate the.
Thank you.
Yeah,
so just for a point of clarification, my understanding is you are able to separate the coverages.
Nope. I am not.
You're able to get from the FAIR plan, you only get fire, and you get the added coverages from other carriers.
It does not work this way. So because I'm with a non-admitted carrier,
right, and non-admitted carrier doesn't.
Right, because I'm with a non-admitted carrier for fire, okay? All my stuff had to go to the non-admitted carrier. I could still not remain through the California Earthquake Authority for earthquake because I'm not through an admitted carrier for fire. So because I'm not an admitted carrier for fire, I can't be through the California Earthquake Authority. I get dropped from everything that's admitted. Right. Even workers' comp, I had to go.
Yeah. Okay.
And for liability. So I'm completely pushed to the non-admitted, and I'm paying a lot more for coverages where I don't have excess risk. And I don't think that makes economic sense.
Could you define non-admitted, please?
Non-admitted carriers are carriers that are not necessarily guaranteed through the insurance association. So if they were to go insolvent, the California Department of Insurance does not back it up. So meaning you're on the hook.
And their rates you think the California FAIR Plan rates are bad? The non-admitted are multiple times the FAIR Plan.
They also take a higher risk. And typically most of the non-admitted carriers tend to be the reinsurers for the insurance company. Some at least. Great question.
I'm going to jump in, and I think Nancy's points are really good. I think if we do, I would love it. I know, Estella, you're gonna come and speak to the Palisades community, or CRCC and the PPCC. We're gonna set something up. I would love it if you could research the Nevada bill and find out if that is something anybody is promoting anywhere in California, whether it's the candidates or someone in your office, or if you want us to work with our, either Ben Allen right now, even though he's going to be a lame duck, but whatever, to try to get somebody to copy the Nevada bill, knowing that at this meeting, we could put people on it to start advocating for that because it is a problem. So that would be something I would love to get more answers on.
Do you guys
The
have
other,
the specific number of that bill?
oh, Nancy, do you know the number of the Nevada bill that decoupled and disconnected the insurance?
I don't, but we can find it. I read about it and I can find it again and get the number.
Yeah, I think you sent it to me in an email once.
Mhm.
So that's one question I had. I wanted to follow up on a comment that I think Kathleen made, and I just want to ask you, in your presentation, you mentioned that drones were allowed, that you really can't stop that. There's nothing preventing that. Is there anything preventing an insurer from walking on someone's property and doing their own assessment without approval of the homeowner? Do you know?
Don't have particulars specific to insurance companies being able to get onto your property, any legislation at the top of my head.
Yeah,
I
same.
can circle back and we can provide that information. It should be fine specific.
That would be interesting because we know the rumors about the drones. People are saying that the drones are coming and that there's not much we can do because it's the public space, blah, blah, blah. But the idea that they would, if a homeowner wasn't home, they would let themselves in and walk around is kind of disconcerting. So I would love to know if that's real because we should begin educating everybody that that's either allowed or it's not allowed. I would think it would not be allowed, but I would like confirmation. The other question I have is the Department of Insurance I think it was, forgive me, it might have been Jeff that said this, that I thought was a very good point, and it ties to what Kathleen had said, the idea of the discount structure. I've been reading articles that something that needs to be done, something we might want to look at either on a national level or state level, and I want to know if you're doing it, is to come up with a format or some sort of formulary where certain conditions of home hardening are ranked at either a higher level than the others or ranked to such a point where you, as a Department of Insurance, because you can control the admitted carriers, can say if a property does have dual pane tempered glass windows, they get X amount off, like a literal dollar amount. And maybe you tie that dollar amount to a percentage of the cost of insurance. And if somebody has, no combustible storage sheds attached to their house or combustible fencing attached to their house, that gets a different type of discount. But where it's not just by insurer, whatever they think, $5 here, $20 there, someone gives 100 here. Is there something that you guys can regulate so that it's known across the board so that there's hard and fast guidelines that we can give as we educate consumers as our FireWise leads to say, hey, we need you to harden the home. And this is what the Department of Insurance says you can get as a discount. Otherwise, it's catch as catch can. It's up to the insurance company. We see that there's no sort of uniformity across the industry as to what you get if you get this work done. So it is a big problem. Our jobs as FireWise leads are to get out there and get as many people to mitigate as possible, but we are running into the disconnect between the cost of mitigation and whatever potential discounts you get. We tell people, oh, become a FireWise community, you'll get a discount. Yes, you get $100 discount. Helpful, but not if your insurance is through a non-admitted carrier and has gone up 200 to 300%. There's no incentive for them. So we have to figure out what the incentives are for people to take out a loan to do the work, to get what kind of discounts. So again, that's something that is top of mind from our point of view, that we would love to hear your positions and know that there is a plan in place, or that no, there isn't, or that has to be legislated and we should advocate for, I don't even know how to go about that, but I know it's been talked about in other communities that suffer from, say, hurricanes or floods, where they've done it in other regions. So can you speak to that? Is there anything on the books or anything in the works right now to try to come up with some sort of,
Right now, there isn't specifics. Again, at the end of the day, these are businesses. So there's so much regulation that we can do. I think there's also different variables. There is the rate per unit, and then there's your premium. So it is going to look differently. And I think once we get into a stabilized market, it's going to be in our benefit as they remain competitive. We will definitely take those suggestions over to our leadership to ensure that it's something that they're looking at if they haven't, and get some updates for you.
Okay, thank you. And then the last thing I have, and not to be a little hog here, but you mentioned one of your goals is to focus on accessibility first and foremost. And that's the, saying your program, the Prepare at Home kind of thing. And that you'll look at affordability later, sort of, once you get accessibility. And I want to just make a comment that those things go hand in hand, because as I have one homeowner in our community that I know of, their insurance, went up 300%, and they like forget about it and they went on the FAIR plan. They're and then the FAIR plan has that cap, and they're just like, I'm not going to do any mitigation. I'm on the FAIR plan. So getting accessibility, and if a insurer comes in and says, yes, I'll insure you, but the prices are so outrageous relative to what they also need to do from a mitigation standpoint, you're not giving us accessibility if we don't have affordability with it. So I don't know what the answer there is, and if is there an answer?
So I think it's taking a step back and really looking at what has transpired. I think one of the biggest examples that we have at hand is when we take a look at the insurance industry, right? We look at the Northridge earthquake. What happened to the earthquake industry and the market of insurance, right? It collapsed, right? We're the only one that was able to provide that insurance was our federal, right? And so when we look at the options that you had and have for earthquake insurance, it became very minimal, right? And so I think that the efforts and the strategy really focus and emphasizes its work to really continue to make that a competitive market, right? And how do you make it a competitive market is continue to keep them doing business here. And so that means that temporarily, while we're allowing it to stabilize, there's still availability. It may not be affordable because you can't, we understand basic economics, right? Supply and demand. Once there's supplies is gone, the prices are going to go higher. But the minute you stabilize the supply and there's more of it, then you begin to really see some stabilization. Then it's more opportunities to really tackle affordability. And I think that's really the essence and the strategy to getting us there. Now, are we there yet? Absolutely not. There's so much work left for us to do, but I think really it's highlighting that we're heading into the direction, right? It is, look, we're with you in how frustrating it is. We're with you in the expense of it, right? We're all residents here, so we sympathize and we feel that with you. And so we understand, but also understanding the dynamics and just the process and where we're heading is we're going to get there.
Okay, well, and I appreciate that. And if Jeff and Nancy can tolerate one more, can you just touch on the FAIR plan? And maybe you discussed this already, but right now it's a 3 million cap. Right now we know that they're not paying out the people for remediation work, that they're really dropping the ball in a lot of areas. Is there any effort from the Department of Insurance to somehow reform the FAIR plan or modify the FAIR plan other than the bills that you discussed? Are you guys looking to do anything else to improve that situation?
They're definitely looking to improve the situation. I know there's lots of conversation around just how to keep them more accountable. And obviously there's some measures that are already coming into play. So we're hoping to see more.
Okay. All right.
So,
thank you.
no.
Questions? Jeff? And then
Yeah,
Nancy.
I know this is going to be an impossible question, but you're talking about stabilizing the market and all that kind of stuff. Do you have any kind of a forecast as to, or goals, I should say, within the department as to when that is to be done? You know, we want to do this, this, and this, and we want it done by here or by this time. Anything?
So we can expect to see some type of relief, we want to say, for a lack of better terms, sometime mid next year. When we look at the insurers that are recommitting to underwriting in high distressed areas, you look at the timeline and effective date. I think the furthest one out is in July, right? Which we're around the corner. So we're going to gradually start seeing the market start getting into a better direction. But we might expect to see it get worse before it gets better.
Thanks for your answer. I appreciate it.
Nancy?
Yeah, I have two more questions. One regards reinsurance, because in terms of stabilizing the market, I kind of like the idea of having a government backup for the reinsurance in the event of a natural disaster. I know Florida had it for hurricanes. It's run into problems because of funding in recent years, but might that help California stabilize the market to have the government basically, back the reinsurers in the event of a natural disaster? And at the same time, government, the state of California, it's going to have skin in the game, continue with the requirements where appropriate for people to, do mitigations on new homes and, built to those standards and such. Is that a possibility? That was question number one. Second question is, I do think in terms of encouraging people to make changes voluntarily, it would be really helpful for us to understand as homeowners how the insurance companies are rating us and how are they using their AI and their modeling to rate us. One of the things that I've wondered, for example, being in the Pacific Palisades, is am I going to get rated really, really high because California State Parks is a few blocks from my home, and it's nearly not going to matter at the end of the day how much I really do because I've got state parks so close to me. And I think those are questions too that homeowners need to get addressed. So I have those two questions for you on reinsurance, and can we peek behind the curtain to see what these AI models are doing on the insurability ratings?
Thank you, Nancy, for the question. So just a point of clarification, when we talk about reinsurance, the issue isn't the reinsurers. They're more than able to cover. What we are running into a challenge is the insurance company, what they're paying for reinsurance. And California, for a very long time and many years, had been the only state that did not allow to be passed down to its consumers. So in turn, what we were seeing was that other states were carrying the burden in California. And so it came to the point where insurers were like, hey, it's too expensive to do business here in the state, this cost of reinsurance, and we can only pass so much to other states. We can no longer do it. So this, you started seeing a lot of the insurance pausing, not issuing new policies. Since then, obviously, the catastrophe model allows for a little of that. There's antiquated ways in which they calculate how each risk and everything is assessed. These models were vetted. I will post on the chat just the vetting and the videos that you can definitely take a look at to learn the specifics.
Thank you. And then the issue on the insurance companies modeling, and can we as consumers see that at any point?
Yeah, I'm gonna definitely post that for you so you can take a look.
Oh, to that too. Okay, very good. Thank you.
Kathleen, additional question?
Yeah, thank you. So I'm wondering how much thinking outside the box is going on here for the future too, because it seems like we're just pretty much rehashing the same models over and over again and reinstating, yes, there's some trying to lower the cost, but and I don't know how other people's lives are, but I do know that for me and many people I know, we're middle income, low income, and so I can't even buy $3 million worth of insurance for my home, even if I wanted to, because I can't afford it. How are we looking in the state of California at perhaps insurance for all? Some kind of a model where it comes from the state instead of private entities, things like that, thinking outside the box. What about, I've got towering 150-foot pine trees in my yard that the state forestry put there, God knows how long ago, and throughout the canyon. What are we doing to mitigate these things in a way that is community, that is, our state doing things as a group, not depicting, because there's a lot of people that just can't even fathom getting insurance or enough to save their home and rebuild. So I think this has to go deeper, and we really have to start thinking about different models, collective models. Thanks. And I'd love to hear your feedback on that.
Thank you. And Kathleen, I'll be honest with you. The fact of trying to provide insurance, I think when we look at uh, the earthquake, right, that's a model of what insurance looks like. And when we look at the numbers in terms of insurability, right, it's really excessive for what the earthquake really offers in coverages. And less than 15% of consumers actually have earthquake insurance because of what they deem as worthwhile. So we realized that that didn't work. And so the innovative ways at which the strategy was set into place, it was really based on proven methods, right? That have already worked not only in other states, but it's been proven to work. And so this is our preliminary phase of really heading into the direction of really stabilizing the market and making sure that there is availability. Again, affordability, we know it's something that's needed. It's something I know that they're still trying to figure out how can we speed up that process. But yet, I mean, we're welcome to suggestions and sending them on through, but understanding that certain methods have already been proven not to work. And so this is why you don't see those as options currently.
So to be honest, I don't have earthquake insurance, but I've been so afraid to even look at it that I haven't educated myself on it. So when I hear you saying it doesn't work, perhaps what doesn't work is that people don't understand it either, or fear it, or they're so busy paying for all the other insurances they don't know. I'd love to hear more about what that model was. And perhaps it was something that we should have looked at, but not enough people know and understand. So I don't know if I wouldn't want to give up because of that. I think that part of it is education of the community and bringing the community into making these decisions. We have something in Los Angeles County that we passed, Measure J, Care First Community, and they have been trying to implement that somewhat, but there's a lot that's blockading that. But I really do believe that's what community wants, whether you have a lot of money or don't. And the more we can start working together and helping each other, whether we make $1 million or we make 20,000 a year, I think that's going to be important if we ever want to integrate our communities. It's going to have to be. Thanks.
Thank you.
Awesome. Well, we are out of time. So thanks everybody for staying on a bit longer. Your questions were amazing. If anybody has any other questions at all about any of this, we'll make sure I'll have JoJo send out Estela's contact information and she can pass it along to anybody else as well. So thank you, Estela and Brenda, for answering all those questions. That was fantastic. And thanks everybody for coming. Um, if you have any other non-insurance FireWise related questions that you don't want to wait until next month's meeting to discuss, feel free to reach out to JoJo as well and she can help you out. So the meeting next month is going to be July 29th at the same time. Something that JoJo wanted me to check in with you all is if anybody is interested in in-person meetings in the future and not just on Zoom, just something to start thinking about. I think she's trying to come up with different options to make it more accessible for people. But yeah, I think that's it. So thanks for coming this week, and we'll make sure that everybody gets all of these resources. And I appreciate all of your great questions and the wonderful presentation.
Thank you, guys.
Yes, thank you.
Thank you all.